You might be paying hundreds, sometimes thousands of dollars too much for car insurance, and you don't even realize it. Insurance companies rely on one thing. Most people never question their bill. They quietly increase premiums, hide discounts, and count on you staying loyal. But today, I'll show you 7 ways insurance companies quietly overcharge you every single month and how to stop it immediately. By the end of this video, you'll know exactly how to lower your premium without sacrificing coverage. And number 5 is the one that saves most drivers the most money. Most people believe staying loyal to one insurance company saves money. In reality, the opposite is often true. Insurance companies frequently raise prices on long-term customers because they assume you won't switch. This is called price optimization. They analyze data and determine how much they can increase your premium before you leave. New customers often get the best deals and promotional rates. Meanwhile, loyal customers slowly pay more and more each year. The fix is simple. Shop around every 12 months. Even a quick comparison between 3 insurers can reveal hundreds of dollars in savings. And here's the surprising part. Many drivers who switch end up saving 20 to 40% instantly. A low deductible sounds appealing. After all, if you get into an accident, you pay less out of pocket. But there's a trade-off. Lower deductibles mean higher monthly premiums, sometimes dramatically higher. For example, a $250 deductible might cost you $60 more per month compared to a $1,000 deductible. That's $720 per year. If you rarely file claims, that extra cost adds up fast. Raising your deductible is one of the fastest ways to reduce premiums, but only do this if you have emergency savings to cover it. Otherwise, an accident could become financially stressful. Insurance companies offer dozens of discounts. But here's the problem. They rarely apply them automatically. You often have to ask for them. Common discounts include safe driver discounts, multi-policy discounts, defensive driving course discounts, low mileage discounts, good student discounts, and telematics tracking programs. Some drivers qualify for 4 or 5 discounts simultaneously. Yet many people only receive one. That's like leaving money on the table every month. The solution is simple. Call your insurer and ask one question. What discounts am I missing? It's a 2-minute conversation that could lower your bill immediately. This next one surprises a lot of people. In many places, insurance companies use credit-based insurance scores. Not your regular credit score exactly, but something closely related. Statistically, insurers believe drivers with stronger credit histories file fewer claims. So drivers with lower scores often pay higher premiums, even if they've never had an accident. Improving your credit over time can lower insurance costs. And sometimes simply updating your insurer after a credit improvement can trigger a premium reduction. Now this next strategy is one of the biggest savings opportunities. Insurance companies love customers who buy multiple policies, so they offer large discounts for bundling. For example, combining auto insurance with home insurance, renter's insurance, motorcycle insurance, or even life insurance. Bundling can reduce premiums 10 to 25% or more, and the process is simple. Instead of having multiple insurers, you combine them under one company. Just make sure the bundle is actually cheaper overall, not just marketed that way. Your car choice also affects insurance more than you might think. Many people only consider the purchase price of a car, but insurance costs vary dramatically between vehicles. Sports cars, luxury vehicles, high theft models, cars with expensive repair parts. All of these can push premiums much higher. Meanwhile, vehicles with advanced safety features, low theft rates, and lower repair costs often have significantly cheaper insurance. Sometimes hundreds of dollars per year cheaper. Before buying a car, it's smart to check insurance estimates first. It's a small step that can prevent years of higher premiums. Now let's talk about a mistake many drivers make without realizing it. Many people continue paying for coverage that no longer makes financial sense. One common example is collision and comprehensive coverage on older cars. If your car is only worth $2,000, but you're paying $400 per year for collision coverage, the math might not work anymore. In some cases, drivers end up paying more in premiums than the car is worth. At that point, dropping certain coverages can make sense. But this depends on your risk tolerance and financial situation. The key is reviewing your policy regularly instead of letting it run unchanged for years. So, if you want to stop overpaying for auto insurance, start with these steps. Compare quotes every year. Consider raising your deductible. Ask your insurer about all available discounts. Improve and monitor your credit score. Bundle policies if possible. Research insurance costs before buying a car. And review your coverage regularly. These small adjustments can save drivers hundreds, sometimes even thousands per year. Auto insurance is one of those bills most people just accept. But the truth is, a little awareness goes a long way. By understanding how insurers price policies, you can avoid hidden costs and keep more money in your pocket. And if you found this helpful, check out the next video on screen where we break down how insurance companies actually calculate your premium. Once you understand that system, saving money becomes even easier.